So it's a pleasure to be here this morning. I must say, I've never thought I'd be leading a panel at a technology conference, which is how it feels. But we're going to try and bring it more into the day-to-day reality of the investment management industry. So in this panel session, we really want to explore how successful asset managers and wealth managers can take advantage of new developments in technology and data science. So I'm very pleased to be sitting with a distinguished panel of asset management leaders and to gain their views on the implications, opportunities and challenges that lie ahead for the investment management industry. Now, we have a lot to talk about in 30 minutes, so I'm going to do some very brief introductions and then try to get into the discussion. So first of all, let me introduce Sarah Russell on my left. She joins us from AEGON Asset Management, where she has been Chief Executive Officer since 2010. Next is Bob Kneip, who is founder and chairman of Kneip, a leading expert in data and reporting for the financial services industry. Then move on to Gary Baker, who's EMEA MD at the CFA Institute. He's responsible for policy development, advocacy and research. Then Jim McCaughan, who's President and Chief Executive Officer at Principal Global Investors. And then Michael O'Sullivan, who's CIO for the International Wealth Management Division at Credit Suisse. So I think you'll agree with me, a very distinguished group. So here's the premise. It's clear to everyone that they have to embrace technology to compete and survive in the 21st century. Many companies, however, are burdened with extensive legacy systems and aging platforms. So my question, I'm going to kick off by asking Sarah to answer, is what does the transition from the old world technology to new world technology look like, and how do you embark on that journey?
Thank you very much, and good morning, everybody. I'm not going to describe what the future looks like, but I might describe some of the dilemmas that I think we need to get over as organisations and as an industry. And I would say that the first thing is we need to really know what it is that we need to protect as friendly competitors and where we need to work together. And I think that if we really understood the difference between the two, we could see much more disruptive change in our industry. As AEGON, we see in the insurance area a real willingness to step into the disruptive discussion around reinsurance. But at the moment, within our asset management business, we are looking to create efficiencies and gains with data and technology, but it's not as disruptive as it could be. I think the other thing that's really critical is we need to ask ourselves, how do we behave as an organisation? And it starts right at the top of the organisation, teaching the leaders what it is to focus on data, analytics, sciences, and teach them and cascade it through the organisation to create the conditions for change. Because if we don't do that, we will have a core group of people who are very invested in it, and we will not understand what's going on, and I could argue we'll lose control.
Thank you. Bob, earlier on we were talking, and you mentioned your 90-day projects, which fascinated me. It takes us sometimes 90 days to figure out what we want to do. How have you gone about implementing programs that get started and finished in 90 days?
Well, you know, talking about digital innovation, changing the industry, I think it's always been our fundamental belief that we effectively want to make this world a better place for investors and savers. And if you want to change something fundamentally, you have to start with the head. So I stepped away as CEO to put in people who are far better equipped to lead such a transformation, and then took a couple of months aside to create what we called an accelerator, where we said we should go differently about projects. And this is not just IT. This can apply to finance, to HR, this can apply to any part of operations or specifically IT, We said within this accelerator, we will determine products, value-added products, where we have identified that they are a clear value add for the client, that they can be, that an MVP, minimum viable product, can be brought to market within maximum 90 days, and where we also have a defined return on investment plan. And so while creating this, this unit, well, effectively last year at the FundForum, we came up with the first digital tool, which is this online fund registration tool, where you basically click, drag, and drop into a country a given fund or share class for registration in that country. That's how we achieved. But it was about starting with disrupting myself.
No, you're very brave to make that big step. Data is clearly already having a major impact on the industry. I mean, we sit on $33+ trillion of assets as a global custodian. We're very interested in how we can utilize that data, create insights. I think the holy grail is predictive analytics. But I was very interested by a comment that Lee Toms just made, that a lot of the technology programs and the technology ideas seem to be technology looking for a problem to solve, rather than the other way around, which is there are problems, how can technology help us solve them? With that in mind, I'd be interested, Michael, in your perspective on sort of the technology and addressing problems, not the other way around.
Yeah, good morning. So I think data analytics in banking has got the biggest impact in new economies and in the mass market. So China and Weibo, et cetera, is the prime example. And what we do at Credit Suisse, we're at the other end, and we have a culture where client data is, for lots of good reasons now, people are seeing is sacrosanct. So we don't sort of harvest client data. We know the clients by speaking to them. But all of the industry pressures are forcing us to innovate in different ways. So one example would be product innovation. We just launched a digital healthcare fund with a client of ours. Another is brand innovation. So one of the catchiest products we have is something called DigiPiggy, which is a sort of digital piggy bank for kids. And the innovation here is on the brand, and kids love it, so it's a good way to get the next generation. And then finally, I think there are lessons of this for fintech. So we get lots of people obviously trying to sell us fintech. And I see this a lot, that people are proposing solutions to us to problems that maybe we don't have, or that they don't quite understand how our organization or banking works. And I think the best fintech is fintech that combines technology with a regulatory gap. So let's say in the lending market, the high frequency, lower end lending market in Europe, you've historically had lots of players, but regulation has forced many of them out, so there's a space there. Or there's a certain niche. We had Sally Krawczyk at an event last week in New York, and she's just set up a sort of a tech-driven bank for women, which I think is quite interesting. So I think you're absolutely right. People have got to get the banking problem squared with the technology solution.
Michael, you have a perspective on this? You have a perspective on the...
Yeah, I mean, I think there are a couple of things to say on it. The challenge is this really driving different business models, and how do you adapt your current existing business model to it? And I would say that the fundamental job, if you're in investment management, you're in wealth management, advisory, the job isn't changed by technology. You have more tools at your disposal. You have to come up with processes by which you take those tools, that data, and that may influence your end decision, but it doesn't change your fundamental job in terms of trying to find solutions, marrying capital with value, companies, etc. And I think that's really important not to lose sight of that. Technology doesn't exist just for technology's sake. It exists to help you reach better conclusions and better decisions for your clients and for yourself. And I think there are things you can do to help that process, one of which is, concept of diversity. Now, but diversity here perhaps is having the artificial intelligence in the room, rather than just the same old, same old. Have something in the room that is trying to ask the difficult questions, trying to disrupt, trying to ask that awkwardness, confront you, challenge you. And I think maybe that's a different concept of diversity going forwards. But it also comes down to your individual personality as well. I think we all talk about different business models, but make sure that starts with yourself, as you said earlier, that you've got to challenge yourself to be learning about these different ways of approaching things and putting that to work. Don't expect the rest of your business to be able to find a solution if you're not prepared to challenge yourself in terms of how you're looking at technology, how you're using it as well.
Sarah, I'm sure you have a perspective on this.
Yes, I have many. I like to look at other markets and other customers and really take leads from those. I think many of us have the opportunity to go to Asia and to go to China and to listen to the wonderful stories of change there. And we're not going through an urbanisation process that is funding their success here. So we have to be able to pick apart what we hear and take away winning elements and really focus on those. And I'm really struck by the fact that we still live in what I would argue, a horizontal value chain, which is really broken up into the departments of compliance and marketing and investments and all sorts of things like this. And last week when we were in China, we were listening to, I would argue, a friend of the market telling us how they think. And their organisation is only IT, plus a few other people. And when they say, I want to build a solution for a client, I say to the IT department, you go and understand what the regulation is and code it in. You go and understand what the client servicing need is and code it in. And they get a much more efficient organisation, but they deliver solutions in a much more integrated way than we have in the past. And I think there's really a lot to be said for looking at other examples in our universe and taking the bits that we can put into our own businesses. Yeah. Not trying to create the whole change, but improvements. Yeah.
Thank you. Moving on to the value of the data that we all hold. We've heard a lot this morning about how we can use data differently, the role of data science, perhaps even impacting operational and investment processes in the near future. So I'm going to ask Jim, where do you see it having the most positive impact, Jim?
Well, I think that firstly, the impact is going to help in analytics and investment performance. I was quoted from this meeting a year ago saying that the ideal recruit is no longer a person who can analyze a company. It's a data scientist who speaks Mandarin. And that is a very big difference in terms of the talent needs of the industry. To illustrate this, for the last 12 to 15 years that we've been really building up our data science, most of it has been applied in equities, 99% for most of that period. That was to do with availability of data and scrubbed data, in particular in US equities. What we've seen in the last 12 to 18 months is other investment areas recognizing, firstly, that the data is available, and secondly, that the techniques work. And I'm talking here about whether it's big data or whether it's artificial intelligence or whether it's machine learning. These buzzwords are used to describe different parts of data science. But the reality is that data science allows you to make deductions from data much more reliably and much more understandably than was the case very subjectively in the past. I'll give you a small example. Text analysis. It used to be that when a 10K came in, the analyst would closet themselves away for 5 hours and study it. Well, the system will tell you the highlights in a few seconds now. And that change makes the human analyst, the human portfolio manager, much more powerful. So I would argue you've got a combination here of purely systematic strategies, sometimes referred to as smart beta, so purely systematic strategies, but also increasingly the use of data science to support what you might have once thought of as more subjective. I do think that the industry is getting stratified, however. I'm almost prepared to give up on systematic strategies as the way to manage large cap liquid assets. But I think there's lots of places where the human portfolio manager can continue to do well, at least for the foreseeable future.
You did just bring up something that's really important, though, is the search for the right talent. And I think that's one of the biggest challenges as we move into this data-driven and AI-driven environment. Be very interested, Michael, in what you're doing to attract that kind of talent as you develop your business.
Yeah, I mean, we have a similar approach in that we're looking for people with maybe more diverse backgrounds. One thing I find speaking to clients and also internally is that sort of older talent, people who've been in the market 20 or plus years, are confronted by a marketplace that seems to be changing in terms of its behavior. And I think the right instinct is to believe that, with maybe 60% of equity trading now driven by different types of computers or computer-driven strategies, either markets are becoming more efficient or they're becoming a little bit more strange. And I think people who have maybe a more human approach to markets feel challenged by this. So last year was a good example with persistently low volatility, which then went badly wrong in February. So I think there is a huge analytical challenge out there, and I've seen maybe only 2 people just scrape away at this, which is to understand the effect on markets and price behavior of robotics, AI, algorithms, etc. And I think we're only just beginning to try and understand not just the market behavior, but also the risks associated with that.
Michael's example on volatility is a really interesting example. People and machines both learn that something's true just before it ceases to be true. Low volatility was a given for years and years. Everybody believed it. Sorry, didn't happen. And I think machine learning will have an interesting challenge coping with the behavioral vagaries of financial markets.
Bob, your thoughts on the talent acquisition and coping with that type of challenge?
Yes, I mean, obviously for us it is a challenge as well, although we're a relatively small company, but we've been around for 25 years, so there's some legacy, there's definitely some legacy there. But we were tempted to look into other sectors that were fundamentally disrupted, and the telecom was one of them. And so that's where we seeked help with the people who had undergone this massive change over the past 5 or 10 years. And so there's teams from mainly Skype, which originated in Luxembourg, so that made a lot of sense, that helped us out first to formulate what it was that we wanted to do. And mainly we saw that what has happened to our industry is just an absolute impressive quantity of silos that were built over time. Up there comes a new regulation, we'll build a new silo. There comes distribution into a new country or continent, we'll build a new silo. And so we have done over the past 10, 15, 20 years, duplicating endlessly everything that we have. And then you still add a series of layers of regulation, legacy IT systems, and there you are, you're stuck. Same as the major IT telephone operators were 10, 15 years ago. And guess what happened to them within 10 years? They lost 400 billion in revenue.
Wow. Gary,
I think it's interesting that, if you look back to some of the presentations, the encouraging thing for me, I think, again, to hold on to is artificial intelligence sounds a lot like intelligence. Pattern recognition, experience over time, that is intelligence, and that's a role that humans can still play in this. And sometimes that's acting as a human circuit breaker in this, is trying to understand a wider context, different inputs. But there is that role. It's up to us to really find out ways in which we can figure that out and play that role. But it does exist. And I think, again, as we go around the world, I mean, some of the research we do at CFA Institute, there is such a demand for that augmented intelligence, that cyborg model, rather than one or another. There's an expectation that everyone will have technology underpinning some of the decisions that they make and they offer to clients, but clients still want it done in a human wrapper. And that's, you know, let's not get too far away from that. Let's figure out what role we can play in that, utilizing this wonderful tool set that we now have.
Sarah, I know you have many challenges, many opportunities to develop your business.
Yeah.
How do you see the talent acquisition playing into that challenge?
I made the remark before about creating the conditions for success. And I think that we need to segment it, because it doesn't help if you want to bring new people with new ideas into an organisation and then suffocate them with the procedures and the policies and the things that are wrapped up around we have to for regulation, like IT security, and you can't do shadow IT. So our approach across AEGON is to have venture funds, and then we observe our investments. We have businesses which are ring-fenced and put beside our, if you like, operating businesses, so that they can do what they will, and we protect the core. And then, as I said before, we need to make sure that we teach the rest of the organisation how to embrace the new talent. Because I think that we've all experienced in the past this desire to bring long hair and flip-flops into the organisation. And the fact that we even describe them like that says that they're different. And as quickly as we can, we're going to get them into the pinstripe suit, let alone a nice dress. So I think, you know, that's the dilemma, that we have to change together, and we need to do it in steps, that we can live the way we're going to need to work tomorrow.
I've got a feeling Bob's comfortable with long hair and flip-flops.
Right, I love it. No, it really changes. If you change an organization the way we did, well, we just looked like, you know, we were sitting here. And over the past year, even the face of the company has changed. But it's not only in product, it's in IT, it's sometimes even in sales, in HR, and so on. And we agreed that there are millennials out there that work and that interact with the millennials who are our customers, and that they have different behaviors, different preferences, and absolutely, I couldn't agree anymore. You can't stick flip-flops and long hair into a traditional organization. That doesn't work. I tried the long hair and the beard and the flip-flops, and definitely it doesn't work. You don't want to see that. So as far as the organization is concerned, yes, you have to be determined to want to change. I think that's one of the biggest challenges that any organization has out there. Say, do you want to change fundamentally? Do you agree that data and reporting should only cost an infinite fraction of what it is today? That you can do a seamless transition from where you are today to the new world without a big bang effect? Yes, you can.
Yeah, to take that point, Bob, the best tool you have in recruitment of digital talent is to have digital talent, because they want to talk to each other, respect each other's thinking and ideas. That's maybe not very encouraging for those who are starting, but there are ways to get started, and having an embedded digital talent group is really very vital looking to the future of the industry. Can I just comment, though, on one thing which we didn't prepare, Daron, which is, I've got to respond to one of the things that was said earlier about technology. There were a couple of people in one of the panels talked about the retirement savings gap. All the trillions of dollars we don't have saved for a decorous and appropriate retirement. There is a fundamental economic problem with this that isn't talked about enough. There is a structural excess in the world economy of savings relative to capital investment. The reason for this, by the way, is technology, because capital investment is now a lot more efficient than it used to be because of technology and utilization of capital that results from it. So I think it's futile to continue saying we need more savings, we need more savings. I think we need to rethink how we're using those savings and rethink the idea of retirement. I think the economic structure just won't let you save more and more, and that will ultimately slow down consumption and slow the economy. I think this is the central problem we have as long-term investors. The excess of savings over capital investment is keeping returns down and will continue to keep returns down. And I think that's probably the most important topic that we've actually covered. It's away from our own, how we run our industry, but I think it's vital to markets.
Yes, interesting aspect. I did want to come back to that sort of starting premise, though. I think about Uber, Amazon, Google, these companies started with a blank sheet of paper. I work for an organization that's the product of perhaps 100 pieces of M&A activity over 15 years. And our job is to bring together all those different companies, create a single operating platform, a strategic platform that we can deliver services from. I think most of your companies don't start or haven't had the luxury of starting with a blank sheet of paper. So it's really, how do you make that first significant step towards this digital world for those in the audience that haven't embarked on that journey yet?
I think there's two things. I mean, it is an industry-wide problem. The first is how you invest in IT. So, for example, doing pilot projects that are outsourced, I think, is a lot quicker. You learn more quickly from that. And secondly, we at Credit Suisse, we are evolving, I think, a lot more quickly with our clients. So we do lots more co-investment with clients, and we invest in client tech projects. And that, for us, that's quite a good way to keep up with many of the tech trends.
So you don't replace yourself like Bob?
No.
That's not the first step.
But I think it does start at the top. I mean, a lot of the work we do says that it's about leadership. I mean, that's how you take the first step. You've got to send some signals through an organization. Organizations are capable of changing, but they have to see that there is a commitment to that, to open up to different influences, different types of talent, and that starts with leaders.
Yeah.
Some things just work better in small teams. Investment is often like that, and so is technology. So the big process that a bank or an insurance company has just strangles it. It does it to investment, it does it to technology. You have to create these sort of safe zones, if you like, where people can be really focused.
Now, I like the example you gave, Sarah, this basically a technology-led business where you're saying to the technologist, here's the latest piece of regulation, understand it and code for it. A really integrated business and technology environment. I think that's what Jim's talking about.
Yeah, well, it was a takeaway from last week's trip, and it's a desire that we might like to achieve. I think the test is how we get there. But I think what I also learnt was that the speed to market is so much quicker when you work that way. And I think that's what's strangling us as well, is that the horizontal way of working today really is stopping us from getting to the market quickly. Yeah.
Bob, your thoughts on?
Well, I think the main message was, well, if you want to change, start with yourself. I think that's the main message. Bringing the right talent. And then, as we have seen, I think the biggest resistance that we have intellectually, everybody agrees that something should happen. But then as soon as you start scratching the surface on the how, that's where it starts to be a bit more dodgy. But that's the bad news. The good news is we're there to help. Thank you.
Well, I've been given the hook. Please join me in thanking the panel.